TrustMF Small Cap Fund is a fund that focuses on the exciting yet volatile world of small cap companies. But is it the right addition to your investment portfolio? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. But before analyzing whether this will fit our investment portfolio or not, let us first understand what is a small cap fund. So what are small cap companies? Small cap companies are those ranked from 251 and beyond up to 500 based on their market capitalization. So these companies usually have a market cap of less than 9,000 crores. But why do we invest in small cap funds? So small cap companies are still in the growth phase, so they offer a lot of potential for higher returns. So if these companies perform well in the market, the returns can be so much higher compared to large cap or mid cap funds. But with the higher return potential comes more risk. So small cap funds are typically more volatile compared to large cap and mid cap funds. This means you could see a bigger price swing, especially during the market ups and downs. Now, as we have understood what is a small cap fund, let us now go on to understanding what is TrustMF Small Cap Fund is about. So as an NFO, it opens on 11th October 2024 and closes on 25th October 2024. And some of the key features of this fund is it is an open-ended fund type which belongs to the category of equity small cap, and it has Nifty small cap 250 TRI index as its benchmark, and there is an exit load of 1% if you choose to redeem from this fund within 180 days of investing in it. And also there is no entry load, and the minimum investment amount you need to start investing in this fund is just 1,000 rupees. And the fund manager for this fund are Mr. Akash Mangani and Mr. Mihir Vora. And according to the riskometer, the risk involved in this fund is very high. Now, if you take a look at the primary investment objective of this fund, that is to provide long-term capital appreciation to the investors by investing predominantly in equity and equity-related instruments of small cap companies. Now, as we have a basic understanding about the TrustMF Small Cap Fund, let's move on to analyzing whether investing in this will be suitable to our investment portfolio or not by analyzing the pros and cons of investing in this fund. So let's take a look at the four key advantages of investing in this fund. So number one is the high growth potential. This fund focuses on small cap companies which are often in the early stages of growth. These companies have the potential to grow rapidly, offering high return opportunities for investors who are willing to take on more risk. Number two, diversification in the small cap sector. So this fund provides exposure to a broad range of small cap stocks, offering diversification within this high growth segment, investing in multiple companies across different industries, which helps reduce the risk of relying too much on any one stock. Number three, opportunities in the emerging sectors. So small cap companies often operate in emerging sectors, giving investors a chance to tap into the new and innovative industries before they grow into major market players. So this can lead to substantial long-term returns if these sectors expand as expected. Number four is the potential for market outperformance. So historically, if you look at it, small cap funds have the potential to outperform large cap and mid cap funds in bull market, offering significant gains to investors who get in early and stick through market fluctuations. So these are all the advantages you can get from investing in this fund. Next, let's take a look at the four potential drawbacks that are involved in this fund. So number one is the higher volatility. So as you know, small cap stocks are known for their higher volatility compared to large cap and mid cap companies. So prices can fluctuate widely, and these companies are more sensitive to economic downturn, making this fund riskier, especially for a conservative investor who's not willing to take a lot of risk. Number two is the liquidity risk. So since small cap companies tend to be less liquid, selling shares during market corrections can be challenging. This liquidity risk may result in delays or lower price when trying to exit your investments in a downturn period. Number three is a longer investment horizon needed. So small cap stocks stocks often take time to grow and deliver returns. So this fund is better suited for investors with a long-term investment horizon in mind. So if you're looking for quick gains as a short-term investor, this volatility of the fund might be too much for you to handle, so it might not be suitable for you to invest in it. Fourth point is a management risk. So since this is an actively managed fund, its success depends heavily on the expertise of the fund manager. So management risk is a factor to consider, as poor stock selection could impact the overall returns. So you need to consider all the potential risk you might get from investing in this fund before deciding to invest in it. So what is the final takeaway from our analysis on the TrustMF small cap fund? So as we can see, it offers high growth potential, but it comes with significant risk, including higher volatility and liquidity concern. So if you are an investor with long-term outlook and can handle the ups and downs of the market, this fund might be a great addition to your investment portfolio. But as always, weigh the risk and rewards before making any investment decision. So our personal opinion is, instead of investing in an NFO like this, which has no track record as of now, and now only we are going to see it how it's going to perform in the highs and lows. If we invest right now, it will be like taking a blind risk, because we do not know how much risk is involved in here. But instead of investing in an NFO like this, if you choose to invest in a existing mutual fund that have a track record for minimum of 7 to 10 years, because in that 7 to 10 year period, the market cycle would have also gotten completed. So you will know how it has performed in the highs and lows, and will be able to take a calculated risk compared to taking the blind risk by investing in an NFO like this. Because without proper portfolio, track record and research, investment is very risky in an NFO. And also it is not suitable if you're looking for funds to add to your core investment portfolio to achieve your main financial goals, because this is an NFO and we've yet to see how it will perform. But if you have surplus money and you want to invest in it just to see how it will perform later on, then you can invest with a minimal amount. Like minimum investment for this fund is 1000 rupees, right? So if you have surplus money, you can start investing through a minimal amount for a trial experimental basis, and later on, as the years go by and you see this fund performing well, then you can increase the investment amount according to what you see fit. But before investing in anything, if you're still struggling taking a decision, or you need professional guidance because you do not have the time or the knowledge about the market for you to properly invest, then definitely consult with a professional financial planner who will be able to give you professional guidance by looking at the suitability of the investment objective, risk profile, overlap ratio and allocation you need to give to the fund you want to invest in, and see whether all these factors align with your goals, your unique financial situation, and help you achieve your financial goals in a faster and smarter way. So in this way, your financial investment journey is very simplified, and it will be very helpful for you in the future with a professional guidance from a certified financial planner.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.